Bitcoin breaching $20,000. It's here, it's happening. Welcome to this special edition of CoinDesk Daily. I'm your host, Christine Lee. Well, the day that we have been talking about, the day that we have been waiting for, has finally arrived. Bitcoin skyrocketing to the moon, crossing that psychological $20,000 barrier to new all-time highs. And it's keeping up that pace, up above now 20,600. Joining me now are markets managing editor Lawrence Lewitinn and first mover editor Bradley Keoun. So, wow, this is a historic day in Bitcoin. So, gentlemen, thank you for joining me last minute. Tell me about the significance of this $20,000 milestone. Bradley, we'll start with you.
Well, Bitcoin was trading at $700 just a few years ago. And this is, a cryptocurrency that was invented 11 years ago. People are buying it for all kinds of reasons. It was invented to be a peer-to-peer payment system on a distributed ledger. And this year, with the Federal Reserve and central banks printing trillions of dollars of stimulus money, Bitcoin took on this narrative as an inflation hedge. And over the past few months, we've just seen more and more big Wall Street firms getting into Bitcoin, and there's a limited supply, so the price just keeps going up.
Right, it just seems like a confluence of the right macroeconomic backdrop. We saw a declining dollar, rising inflation, unprecedented monetary and fiscal policy. How about you, Lawrence? Tell us about the significance of this event, because, Bitcoin has tried to break the $20,000 barrier back in 2017. It came so close in everyone's mind. They said, Bitcoin reached about $20,000, but we couldn't say that it ever surpassed it or something down those lines. So tell me, what went into today being that moment?
So, first of all, there were a couple of exchanges where in 2017 we broke above 20,000. So that level more or less was there. It was a psychological level, to be sure. But in recent days, 20,000 was where a lot of sell orders were. So it's not just that it broke a psychological barrier. It broke a level that's, a round figure. It had to overcome, thousands of sell orders in the market. We estimated it was probably at the, in the magnitude of at least 1,500, 1,500 sell orders that were floating around at around the 20,000 level. So a massive buy had to have happened. Now, we had a lot of institutions, of course, in the past few months express interest in Bitcoin, but very recently we had rougher investments. We had a story that we reported first yesterday, and then today we had the amount confirmed. It was a lot larger than we initially expected. It was about over $740 million worth of Bitcoin was purchased in November by Ruffer. We had that confirmation come out on CoinDesk at about 8:30 or so Eastern time. Within about 10-15 minutes, the price broke above 20,000. Now, of course, you can't necessarily say that's specifically the reason, but it's in many ways part of the explanation of why we've seen Bitcoin break above these kind of levels. A lot of institutions are interested in it. We have a lot of institutions that are, let's just be frank, we want to call it window dressing. This is a common occurrence that happens on Wall Street towards the end of a quarter or end of a year, something that's a winner. They basically want to have that on their portfolios to show that, hey, look, we bought Bitcoin in Q4. And so that 20,000 level was important to some extent psychologically, but also that the fact that it was able to overcome all those sell orders tells us that there is some amount of institutional interest, some amount of large interest. It's not just retail that's involved. So that's basically what we're looking at now. We might have a few more days of this.
You mentioned the sell orders. We saw a dip in Bitcoin yesterday from 19,500 amid news that there were a lot of whales in Asia, that is Bitcoin holders with a large amount of Bitcoin, putting their Bitcoin on the exchanges. And we saw that data in Huobi Global, seeing a lot of Bitcoin put onto the exchange there. And then we saw a dip from 19,500. So you mentioned a lot of sell orders. So what gave it this push today? You mentioned institutional interest. Is that from the United States in particular, Europe, Asia?
Well, Ruffers in Europe. They're UK based. So, what we've seen over the past few months, though, is the steady flow of Bitcoin from Asia to North America. So we're, that in many ways that it's part of that story. For a time at least, OKEX, had a report a few days ago that said that basically whales would put out, they basically went out and bought the dips and sold it to retail. Retail went out and bought from what might be the whales, what might be other sellers. So for a while that seemed to have been the story, but this is the end of the year. And a lot of things might change. Going back to the whole idea of window dressing, particularly in North America, where we see a lot of interest now, a lot of institutional, and when I say institutions, we're still talking about not the biggest ones in finance. Those guys, so here and there, Mass Mutual coming in at about 100 million. That's a pretty big institution. But this is just the beginning in many respects of institutional interest into Bitcoin and other cryptocurrencies. So, if anything, of the past few days, there might be more, you would say, a little bit more North American focused.
Right. You mentioned Mass Mutual putting in $100 million into Bitcoin, but we've heard news throughout the year down these lines. For instance, MicroStrategy, one of the top stories and one of the top influencers on the CoinDesk, most influential this year, putting in 475 million in purchases from August, September, December, also raising 650 million in convertible notes that will go toward Bitcoin purchases with the net proceeds from that. And we see Square also buying $50 million worth of Bitcoin from their treasuries. And a lot of big names like Guggenheim, Citigroup, JP Morgan just speaking warmly, BlackRock speaking warmly about Bitcoin. So Brad, tell me a bit about the reasons, why now? Is this the start of a new bull run for Bitcoin?
I guess I would answer your question by saying, if you step back and think about kind of how Wall Street works, generally speaking, a lot of times there's a lot of herd mentality in Wall Street, and people just do whatever they see someone else who's smarter and richer than they perceive themselves to be doing. And so, this all started several months ago when Paul Tudor Jones, who's a legendary hedge fund manager, who in some ways gets credit for predicting the 1987 stock market crash. He was kind of the first big name to kind of say, yeah, I'm in on Bitcoin. And the reason is because it could potentially be a hedge against central bank money printing, which is happening because of the coronavirus and all the stimulus efforts. Over time, we saw more and more people getting in, and, prices going up and up and up, and it just reinforced the trend. And a lot of big investors, including really sophisticated, funds and pension funds, they often will buy something that has a good track record, which just means that it's just been doing well in the past. So, Bitcoin is triple this year prices. The stock market is up, 12 or 13%. And so by comparison, if you bought Bitcoin at the beginning of the year, you would have made what it would have taken you 12 years to make in the stock market. And so people are just piling in. I think it's a lot, there's a lot of fear of missing out. I think that's probably a big part of the rally.
Right.
I'll add to that a little bit. One aspect that portfolio managers have to look at, besides the just the returns, it's also the volatility and the risk adjusted returns. And to be sure, Bitcoin has had large volatility, but the other thing that the high returns bring to it is that there's also the aspect that its correlation with other asset classes, such as stocks or with gold, for instance. It's still relatively low. You're looking at a correlation. If we look at it from 90-day correlations, 0.3 correlation coefficient of about 0.3, 0.4, somewhere in that range for those other asset classes. So for some of these institutions that are looking at it from a portfolio management point of view, they look at it and say, well, you know what, this is an asset class we got to be in, at least on some level, as part of diversification. So even though the volatility might be high, the returns are quite high as well, especially over the past couple of months. And it makes sense from a portfolio management point of view to start getting in a little bit, for these institutions to get in a little bit into Bitcoin, and to show the people that have invested in their funds that, look, we're taking active risk management, we're taking active portfolio management, and we're looking at it from the perspective of reducing the risk and improving our Sharpe ratio overall. So we might see more of that down the road.
Lawrence, you mentioned risk, you mentioned volatility. So what would you say to our crypto curious audience out there who is not really that knowledgeable about Bitcoin, but is very fascinated by this news today? What should they know?
Of course, Bitcoin has had that kind of rally before. It's gone up tremendously before. 2017 is an example. Of course, it's a different market than it was in 2017, to be sure, because in 2017 we didn't have the derivatives market that we have today. We didn't have really, types like the CME. CBOE started getting involved in 2017. And Christian Carlo, the former CFTC head, said that helped temper the rally in Bitcoin a little bit, but that can be argued. At the very least, the market is a bit different. Nonetheless, you have to be aware that when something has high volatility on the upside, because it goes up so high, right? When you look at the standard deviation, you see a large standard deviation, meaning a large probability of it going in any direction. We just look at it on one side. It also could mean it could go down tremendously as well. So anybody who is looking to maybe go into Bitcoin, one thing that time-honored tradition, if you're going to go into something, especially in a volatile market, don't put all your money in all at once. Dollar cost averaging seems to be one of the better methods. As somebody who's going to buy into this situation, put in a little bit every month to buy as they get their feet wet. That's only if they see it as a buy. Don't jump into something. And the other thing is, be aware that all that money, a lot of it can go down, but nonetheless, we have to remember that the attitude and the view of Bitcoin has changed tremendously on Wall Street, has changed tremendously on Main Street since 2017. So, it's definitely a new world, but, be cautious, of course. And, I'm always wary if people say, do your own research, because it often means just Googling, but do more than just Googling. Read CoinDesk, read all sorts of sources, and get informed about how these markets work and how Bitcoin works, and all the risks that are involved. And there are some risks. There are some rewards, but definitely some risks.
Lawrence, Brad, actually, you mentioned, I'm looking at the markets right now, and on Wall Street, stocks are modestly up. I'm looking at Bitcoin, which is, skyrocketing still, 20,700, according to CoinDesk 20 data. So, hey, Brad, question for you. Is this just a result of all these positive growth-oriented economic conditions from the stock market? Is this just are we just in a time and a place where everything's just going up? And so Bitcoin is too. Is it correlated with the market? Can you talk about that, as well as actually there's also a Fed meeting going on that I want you to touch up on if you could.
Well, Christine, I mean, going back, Bitcoin is so new relative to these other markets that we're talking about, the stock market, the government bond market, foreign exchange markets. And people really, even at the beginning of this year, they weren't really sure, Lawrence was talking about the correlations. They weren't really sure what Bitcoin was as an investment. Was it a safe haven asset that holds its value when everything, goes down? Or was it a risky asset, but like leveraged, on stocks? Or was it a hedge against inflation? And it kind of moved in and out of all of these various stories. And it's really been this year, when the coronavirus hit and we saw this flood of stimulus money from the Fed and the governments and everybody, that Bitcoin took on this inflation story. And so people are still trying to figure out how to value Bitcoin. I mean, if you look at what some analysts say, price predictions, it's all over the place. Some people say 300,000. Some people say 50,000. Some people say it's worth nothing, and it's because it's so new and it's just become this phenomenon. And everybody's gravitating towards Bitcoin. I think, a lot of people don't really understand how blockchain works, but they think Bitcoin prices are going up. We've had some stories in recent weeks about how now that prices are above $20,000, there's a science called technical analysis, which in some ways is an art, where people use charts and patterns on charts to try to figure out, okay, where is Bitcoin prices going next? And once you get above these levels that are uncharted territory, like nobody really knows where it could go next. It could shoot up to 30,000, it could, or we had a quote from an analyst today saying that history shows when we hit these levels, we often have price pullbacks. The Fed meeting today is just, the latest in the Fed's response to the coronavirus. The Fed, Congress is unable to pass a stimulus package. They keep talking, it's this number, that number, this, liability insurance is out, whatever's in, state funding for states. And they're just kind of bickering and they can't really get anything done. And, the Fed is the one who can print money and shove it into the market. They don't quite work similarly, but, that is the Fed's role, whether they like it or not. They're the backstop. Today's Fed meeting is just the latest example of, the trend of this year.
Right. So we've seen unprecedented fiscal and monetary policy. And that some investors have treated Bitcoin as a hedge against inflationary pressures, against a declining dollar. What's next for Bitcoin, Lawrence? I mean, we hear that there are predictions from Citigroup, for instance, that Bitcoin could hit 300,000 by December of 2021. Some people say $1 million. What's next for Bitcoin?
I mean, look, we could throw numbers here and there. At the end of the day, really what drives Bitcoin at the moment is a speculation that in the future, it will have a utility for a world that is different than the one we're seeing today. Whether its utility will be as a hedge against inflation or a means of transaction or another form of money, something like that. So we're still not quite at the point where it's entirely a hedge against inflation, we're sort of at a point right now where it's a speculative hedge against inflation down the road. And what I mean by that is this: we have gold. Gold has been a hedge against inflation for 5,000 years, if not more. It was money for 5,000 years essentially. And once we went on a free float currencies after the collapse of Bretton Woods, um, you know, it had that role of being where to go when monetary policy and fiscal policy went out of control. But the view now is, all right, well, is Bitcoin future gold? Is Bitcoin the gold of the future? We don't know yet. If you're, and to some degree, people are buying it as a speculation that down the road, maybe a year, maybe 10 years, that's what Bitcoin will do. But for now, it's sort of like a bet that maybe that will happen. So if we put a price target of 300,000, 60, 10 million, as I've seen some people throw in there, we can go on and on, just throw digits. After a while, I mean, will it replace all the money in the world? If it replaced all the money in the world, it would be like $10 million. It would be the value. Probably not that high. Let's just bring everything back down to reality a little bit. But we have to sort of gauge what the market views Bitcoin. Again, it's a supply and demand. We're estimating what future demand will be, and that's what's going to dictate the price. So, I'm a little hesitant to agree with these kind of crazy numbers because we just don't know.
All right. Wrapping up, any last thoughts, gentlemen? Brad, what do you want to leave viewers off with?
Well, we also have to look at some other things happening in the cryptocurrency market. If you look at the price of ETH, it's gone up significantly today. CME is also going to provide futures in February. They announced that today. We have other cryptocurrencies that are worth looking at. They have different value propositions than Bitcoin. Of course, we're here talking about Bitcoin because that's the one that broke 20,000 today. It's also the oldest. It's the one that's most talked about. It's the largest by market cap. Most of the time when you're talking about cryptocurrencies on Main Street, that's what they mean. There are other places where other places in the cryptocurrency universe, if you will, where you can look at and might have also value propositions that are positive for down the road. So that's it's an exciting time, of course, for Bitcoin and Bitcoin investors. They're popping the champagne corks after 3 years of the wilderness. It felt like, what a great way to cap off 2020 if you owned a lot of Bitcoin back, during those rough periods. But nonetheless, there are many other opportunities out there. Some of them are good, some of them aren't, and that will require some amount of due diligence on the part of the investor.
Yes, crypto Twitter is alight, celebrating. Brad, any last thoughts before we close this out?
I was just thinking, going back to your earlier question about the Fed, and Bitcoin really has worked its way into the center of a lot of conversations that are happening in Wall Street and like the global economy about the future of money, as Lawrence was saying. This year, I would say, cements Bitcoin's place in that monetary history. I mean, this was something that was just invented by some humans 11 years ago. And it's shown that it's still working now. It's this money that's built on this distributed network that nobody controls. It's totally different from government issued money. It's purely electronic. It's pretty fascinating that it has lasted this long, and this year, sort of laying in another really solid year. it just, reinforces that it now has its own chapter in global monetary history.
Good point, Brad. As you mentioned, Bitcoin was created by a human, but it's kept alive by a community. And that is what is at the heart of this cryptocurrency. So to our viewers out there, if you are new to crypto, I want to remind you that we have a Learn section at CoinDesk.com that teaches you all about Bitcoin, other cryptocurrencies, and the blockchain space. So be sure to check that out. Bitcoin right now at $20,651, according to CoinDesk 20 data. Ethereum, also an alternative currency, is also skyrocketing, $619 right now, up about 5.8%. We're seeing a lot of alts take advantage of this optimism we're seeing in a rally of cryptocurrency. So thank you, Markets Managing Editor Lawrence Lewitinn and First Mover Editor Bradley Keoun, for joining us. You can read more and check our videos, podcasts, and newsletters online at CoinDesk.com. For CoinDesk TV in New York, I'm Christine Lee.